Hey, what's up guys? John here. Breaking news. The Democrats float this tax on investments to help pay for this $3.5 trillion infrastructure bill. This was just updated 20 minutes ago. This was just announced. So here's what they're trying to do. Congressional Democrats are floating a slew of taxes to help cover the $3.5 trillion budget plan, including new levies on the wealthy. Senate Finance Committee Chairman Ron Dwinden, Democrat Morgan, has introduced proposals for taxes on so-called derivatives, which are financial contracts linked to assets as well as carried interest, which generally is received by hedge fund managers and private equity firms. These measures call for a mark-to-market tax, meaning investors may pay levies annually based on market value and may pave the way for broader pushes to similar levies on capital gains, according to the Tax Foundation analysis. Currently, investors don't pay taxes on gains or claim a deduction for losses until they sell. However, mark-to-market levies would occur every year, even if they still own the asset. You think about what they're saying here. You'll be taxed based on what you hold, not based on what you sell. The country's wealthiest, who profited immensely during the pandemic, have not been paying their fair share, said Dwinden. In a statement provided by a spokesperson, they can defer, and never pay taxes on billions in gains. Future mark-to-market tax proposals may aim to stop billionaires from delaying taxes for decades or even indefinitely by passing wealth to their heirs, according to a list obtained by CNBC. No nurse or firefighter or teacher in America can play those games, said Dwinden. They pay their taxes with every paycheck and are rightfully outraged when they read about the wealthiest new few playing so little while the working hard make ends meet. We need to fix the broken system. All this is going to do is force the wealthy to be more creative and more strategic. That's it. When they start building out these new plans, these new formulas, essentially what generally happens is that they have the accountants, they have the team of attorneys, they have the infrastructure in place, and they're already building out the infrastructure needed to shield themselves from all these taxes. Meanwhile, the middle class that has their money in a 401k, that they have their money in the markets, when the wealthy and the elite are selling off, what's going to happen is that the middle class will end up taking this right to the head. Taxpayers with income of more than $500,000 received about 72% of all the realized capital gains in 2016, according to IRS data. A mark-to-market tax on billionaires may affect roughly 600 Americans and raise hundreds of billions in revenue, according to some estimates. However, it may be difficult to predict how much such a measure may bring in, said Leonard Brumman, Institute of the Urban Institute and co-founder of Tax Policy Center. We don't have good data on the changes in the value of assets that people are holding, he said. It really eliminates the main avenues that people can use to avoid capital gains tax. Moreover, income tax revenue from the government may be volatile without limits on annual loss deductions. There could be trillions of dollars in losses in a year, Brumman said, but the measure may still have more of a significant impact depending on the limitations and phase-outs, he said. It really eliminates the main avenues that people can use to avoid capital gains tax, said Brumman. However, with pushback from centralist Democrats and Republicans, it's unclear which proposals may make it into the final version of the budget. Wyndham proposed a mark-to-market plan in 2019 and delivered a white paper calling for a levy of taxpayers making more than $1 million in income with more than $10 million in assets. Earlier this year, Democrats, including Senator Elizabeth Warren, Democrat Massachusetts, and Senator Bernie Sanders, proposed a 3% annual tax on wealth of more than $1 billion. We're stepping into a very interesting time, and I think one of the most important things that people in America can be doing right now is studying and planning, speaking with a financial advisor, an accountant, speaking to someone that is knowledgeable in your specific situation to help you plan and protect your assets, protect your wealth, and protect yourself financially, because we are stepping into some very, very uncertain times and anything can happen. The temperament in the market right now is very hot. Everyone feels like the market's sound. However, what we've learned over the last 18 months is anything can happen and you got to be prepared for worst case scenario. I think right now is a really good time to get prepared for just that very scenario. What are your thoughts? Drop your comments below. Smash that like button. Consider subscribing here Also, consider subscribing to my personal channel. All of the links pinned down below in the top comment. I'll see you guys in the next video.